Hello everyone, just one more minute for people to gather.
Hello.
Good morning everyone. I'm Ilya Muchnik, partner at Kinstellar. I lead our fintech work across the region. Today we are talking about tokenization and its legal framework. It sounds broad, but we'll try to keep it practical and close to real deals. Let me introduce our two speakers here. Philippe Murar is a counsel on our Prague office. He'll focus on the legal and regulatory sides, and he's a legal counsel, supported several tokenization deals, and will share his experience. And Daniel Reinoch is a founder and CEO of InvestBay, eco-financing tokenized real estate investment platform. Daniel will show how tokenization works in a real project, what challenges they faced along the way, and what solutions developed. And my role is keep the discussions practical and ask the questions that clients usually raise when they try to launch a tokenization project. So why this topic now? Tokenization is no longer just a buzzword. We already see tokenized bonds, fund interest, real estate, banks, platform issuers. They are testing it because they want to have different ways to raise capital, access to wider investor base, and better options for the secondary trading. But almost every serious discussion comes back to three simple questions. So what exactly tokenization is in legal and economic terms, not in marketing words? Which rules apply here? MiCA, MiFID, fund regulations, anything else? And how these rules interact with each other? And finally, what investors actually own when they buy a token, how the rights are protected by law. What we will do in these sessions. First, Philip will explain in clear terms what tokenization is, show the difference between a token that represents existing assets, for example, shares in a property or SPV, and a natively digital instrument, walk through the main regulatory ways in Europe when token is treated as a security, when it falls under the fund rules, etc. I'll try to step with questions on the points that worry the clients most, like how we legally connect the token to the underlying assets. And then Daniel will explain how investment-based structures tokenized real estate investment in real life, describe the investor journey in practice, from onboarding to KYC, cash flows, exit, and the bank and be frank and open about what tokenization has actually improved in the company and what remains the same in terms of real estate tax and regulatory issues. So by the end of the session, hopefully you should be able to explain tokenization to a colleague, roughly place tokenization products into the correct regulatory category, and ask the right questions when someone comes to you with a tokenization idea. With that, let's start. Philippe, over to you. Floor is yours.
Thank you, Ilya, and also from me, good morning or afternoon wherever you are. Thank you for participating and your time in this presentation, because we are very much excited about tokenization and its legal implications, and want to share our excitement with as many people as possible. As Ilya said, I will do a brief introduction on the legal framework and implications of tokenization. We'll try to make my part as short as possible, because I would expect that everyone is much more interested in how this works in real world in practice, and to listen to whatever Daniel has to say. I have a few introductory slides, which I would expect are not that relevant for this audience, because obviously if you decided to join this webinar, I think you already know a thing or two about tokenization. But what is tokenization? When someone asks you what is tokenization of assets, I think the most accepted, widely generally used definition is creating something called a digital twin of a real world asset, taking something which is in the real world, like a building, like art, real estate, financial asset, and converting it into a digital form. Three key terms, in my view, relate to tokenization of assets. These are distributed ledger technology or blockchain, smart contracts, and digital assets or tokens themselves. Distributed ledger or blockchain technology, I think it's very much has gotten into the mainstream of today's discussions, thanks mainly to the wide adoption of Bitcoin. From a technical perspective, this is a database with information which is not stored in a single computer or with a single custodian, but is distributed across a wide network of computers, nodes, and which includes transaction data, transaction history, and is used to effect transactions. Smart contract is something which is much more, I think, interesting from legal perspective. A smart contract is the foundation of how transactions on the blockchain work. From technical perspective, it's a software program. It's a pre-programmed self-executing algorithm which serves as a basis for legal transactions. For example, sale and purchase agreement is executed by a smart contract on blockchain when certain conditions are met. When the sell and purchase orders are met, it's automatically executed. So that, and the idea behind this is to say eliminate human interaction with it, and with that also the factor of human mistake. It's the self-execution is, I think, the key aspect here. And obviously, smart contracts are used widely in relation to tokenizations, the transaction relating to that, payments of certain dividends, other transactions, etc. And the third aspect are the digital assets or tokens themselves. This is the digital asset, the asset class itself, which is the foundation of tokenization. in the European Union, we have a so-called MiCA regulation, markets in crypto assets, which contains a legal definition of what is a crypto asset. Basically, it is a digital representation value of or a right, which is, going back to the first slide, maintained, stored, or transferred by DLT, distributed ledger technology. And you may imagine in practice cryptocurrencies, stable coins, central bank digital currencies, NFT, non-fungible tokens, or tokenized real-world assets, which we will talk about in the following minutes. Moving on. What are the key benefits of tokenization? It all is connected with the technical background of this technology, because obviously with trading of assets on DLT or blockchain, there are no restricted trading hours. These are not these technologies or networks are not managed by licensed institutions and banks or brokers. There's no reliance on third parties. So it's 24/7 availability and trading, instant transaction settlement, what we would be used to with Swift international payment transactions, T+2, T+1. This doesn't work on DLT. Low entry barriers and small investors may access high value assets. This relates to what tokenization actually does from a market or economic perspective. If you take $1 billion worth building and split it into 1 billion tokens, each investor may buy himself or herself into with just one single dollar investment. With that comes higher liquidity, particularly in relation to low liquidity assets such as real estate, and transparency. Transparency is, I think, a synonym of DLT technology, because everybody has direct access to the whole transaction history and may instantly verify if transaction has been settled or I think from a technical perspective, we may distinguish between what we call native and non-native assets. It's quite simple when you really look at it. Non-native tokens represent digital twins of a real-world asset. These we will look at some examples later on, such as tokenization of real estate, tokenization of investment fund units, etc., etc. What is quite specific are digitally native assets, which are digital assets which are issued as digital assets, are tokenized themselves. There is no, let's say, underlying real-world asset. For example, digital bonds issued by the World Bank, which I think, when you really think about it, is a game-changing event, because World Bank, global, really risk-averse institution, going into the digital world and issuing digital-only financial instruments, it's something which really would be unthinkable a few years back. We also have some interesting market data, because obviously various studies have been performed in relation to the tokenized markets. You can see some interesting data. I will pick just a few. See the underwriting fees reduced by almost 25% compared to traditional bonds. Obviously, when there is no need for manual reconciliation of orders and management of the evidence of the bondholders, etc., it significantly reduces the costs and consequently the fees. Enhanced liquidity on the secondary market. You can see that the bid-ask spreads are 5.3% lower on average for tokenized bonds. So you can see that the tokenized markets are more efficient than traditional financial markets. And this last point is quite interesting. JP Morgan and Apollo have estimated that because there is this T+2 settlement standard in relation to blockchain technology, there is much less need for portfolio managers to keep cash pillows on their books. So it significantly reduces the cash drag of portfolio managers and increases basically the returns and profits to the funds and the investors in such funds. I will then move on to a few real world examples of how tokenized assets work in practice before handing over to Daniel to share his experience. Just a few. This is Wisdom Tree Money Market Digital Fund is one of the first tokenized investment funds which issued tokenized fund units. You can see here on the lower paragraph is an extract from the fund's prospectus. You can see it works almost perfectly as the digital twin, meaning that the fund in practice issues real world fund units which are registered in the fund evidence, and on the other hand, it issues separate issuance of digital fund units. And the way it works is when a transaction occurs on the blockchain, the fund units are sold. This transaction is then reflected in the fund's own evidence. So it works also from the regulatory perspective. Another example is tokenization of real estate. I think Daniel will have much more insight and experience on that. One of the first examples is from 2019. This specific villa in Paris. The way it works in practice from legal perspective is that the building, the real estate asset is transferred into special purpose vehicle, special purpose company, which is then the legal and beneficial owner of the asset. And the same company then issues tokens which then represent the share of the token holders on the value of the asset, also on the revenues generated by the assets. In case of real estate, obviously it would be rent revenues. What is, I think, most game-changing about world economy and financial markets is the issuance of tokenized money. Obviously, everybody has heard of stablecoins such as USD Coin, USDT. Some jurisdictions, although not many, experiment with the issuance of so-called CBDC, central bank digital currency. Not many examples are available. We have shared the Sand Dollar, which is a project of the central bank of the Bahamas. But what is, I think, very much interesting is the tokenized deposit idea, which is currently being rolled out in practice by JP Chase, the JPM coin, which I think is also a game changer for say global businesses, because imagine you would be a manager of a global business. You have some $10 million on an account of your US headquarters by Friday afternoon, and you need to move $10 million to your Singapore subsidiary. With traditional financial framework, you cannot do that because obviously Friday afternoon, all the Swift cutoff times are long gone. You would have to wait maybe until Tuesday to settle the transaction. With the Kinexys network, what would happen is that JP Morgan would say mint $10 million worth of these tokens and deduct $10 million from the account of your US headquarters, instantly move these tokens to the account of your Singapore subsidiary, and also instantly, after necessary KYC AML procedures, credit $10 million US dollars real money to the account of your Singapore subsidiary. So really, in payments, this is in international payments, this is a game changer. Moving on. Yes, I think this is the summary of the legal challenges we have seen in practice in relation to tokenization. And as Ilya already, I think, mentioned, we though we have some applicable legal frameworks like the MiCA regulation and related regulations in the European Union, it is still not certain which framework is applicable. Because obviously, for example, tokenized securities are these qualified as securities under the MiFID regime, markets and financial instruments, or under MiCA. We have ESMA, European Securities and Markets Authority guidelines, which do provide some guidance and could be summarized as content over form, meaning if it looks like a security, if it behaves like a security, it provides similar rights as a security, it should be treated as a security, not as a crypto asset. But this really varies jurisdiction to jurisdiction. For example, here in the Czech Republic, or the Czech regulator, the Czech National Bank, does not share this view. So it's really, I think, complicated for businesses to navigate these let's say unclear waters, because the question is how to scale internationally when the interpretation of what this asset is different jurisdiction by jurisdiction. So this is one of the legal challenges we face, I think, the most. Obviously, collective investment schemes regulation comes into play, because when these projects, these tokenized assets are rolled out to offer to the public, it triggers these regulations. Also, another interesting question is the enforceability of the smart contracts under local national laws, because obviously, for example, Czech law does not recognize specifically smart contracts. We need to apply general civil law rules to that, and it may yield different results. I do have maybe if
Philip, may I
Yes,
ask a question about it one?
yes. Go on, Ilya.
Actually,
Yes,
in a
sure.
typical civil law jurisdiction in our region, like Czech Republic, Slovakia, Germany, Ukraine, how do you actually make a smart contract legally enforceable?
Yeah.
Is it treated just like an automation tool which is attached to a traditional contract, or is there any court or regulators that accept the code as a part of the terms, or how do you do it?
Yes. Thank you. I think it's a very good question, because, like I said, we don't have any specific regulation for this, and we do not have any case law, obviously, for this. So what we need to do is to look at it through the optics of the applicable laws which we have for contracts. We will need to have a look. Is a contract which is entered into through a computer algorithm? It is a written form. I would say yes. Can it be signed through the blockchain technology? I also would think yes, because the combination of the private and public keys, which is assignable to a specific person, you can identify who is the contract party. So I think it works as well. And what is a contract under Czech law? It's an offer. It's an acceptance of such offer. I think we can also identify that in a smart contract. So I think, from a legal view, smart contracts would be enforceable under Czech law, maybe similarly under also continental jurisdictions. What may be an issue, I think, is how to prove that in case of a dispute before a court of law or a regulator. How do you provide evidence that the code actually is a contract, which may be a bit tricky. I think it will be, I think, on the lawyers to explain to the judge or the regulators what's the technical guts behind that and how it works as a contract. But I don't think that smart contracts would be unenforceable under our laws.
Thank you, Philip.
No problem. And perhaps I have spent a lot of time on these previous slides, so I have one more slide relating to sandboxes. I think we can skip that and move on to Daniel's input, because I think that would be very interesting to hear your perspective, your experience and war stories of sorts. So over to you, Daniel.
Thank you very much. Thank you very much, Philip. I won't be so long. I will be even shorter. I want to thank you, firstly, all the Kinstar team that they invite me to present in West Bay and how we are doing the tokenization of a property. And thank you all of the participants that they are joining this call and webinar, and they are interested about the tokenization of the real estate. In West Bay, our vision is to enable the people basically invest in a real estate in the same way how they are get used to it with the stocks, boards, bonds, or another commodities, let's say. And I will ask Philip to go to the next slide. Thank you very much. Real estate is one of the most powerful wealth building assets, but still doesn't work for most of the people. It still remains expensive, illiquid, and locked behind the institutional or legal barriers. High minimum investment lock out everyday investors. Legal and tax hurdles block cross-border ownership, and traditional exit takes a really long time. That's why we came with Invest Bay, and I will ask Philip to move another slide as well. And in Invest Bay, we try to redefine property ownership. We are turning premium vacation homes into accessible, liquid, and high yield investment. So anyone can invest from 100 euros on our platform and enjoying the double stream income, trade ownership on our secondary market, which we are currently building, and also have experience the property by themselves with a discounted price, which is a bonus from our investors. I will ask Philip to our last slide, how we are doing. We have a platform which is on a web where our investor can do the registration and AML KYC process by themselves. They can go and search in the offering property which we have currently in our offer. They can see estimation of the earnings, and they can buy the tokens from a pool which representing the value of a property on the start. During the period, we are operating the properties through our operators, and we are receiving the rents which is generating on the vacation property which we've been tokenized. And after the investment horizon ends, we sell the property and also distribute the proceeds, including the capital growth with our investors. On our side, we are doing basically end-to-end service for our clients. We take care of the searching of a various market. We doing the legal and tax due diligence of the property. We are signing the contract. We looking for a right operator. Then we finally know the value on the start of a property, and we are creating the tokens, which we are then offer through our platform to our investors, and they can really invest from 100 euros. It means that the property, it's really accessible for everybody, and people can join basically the ownership, even in a small part. Currently, we have various property in 7 different countries like Spain, Tenerife, Mallorca, Bali, Croatia, Slovakia, and this is how we are operating on Invest Bay. I will be happy to answer because we only choose these 3 slides. Philip, you can go the last one, and I will be happy for answer any question how we are doing, because we want to give you just short overview on our project.
Thank you very much, Daniel. That was really interesting to hear the real world example of tokenization. A couple of questions from my side. The most interesting and challenging thing in tokenization is that bridge between real fiat money and tokens. So how do you manage cash flows downstream when you receive money from investors and then channel it down to acquire the property on a technical level?
Yeah. Firstly, I have to say that we want to we at InvestWay, we are feeling that the tokenization is basically only the technology layer, how you can distribute the ownership of a property widely, globally, how you can back monitor who is currently owner of the partial part of a property. When we are collecting the money, we try to do it in a fiat currency. Our main currency is a euro, which we are converted either in the Czech crowns in these days or in the Polski zloty. We are preparing in USD as well. This money are going to the regulated bank account, which is under the provider, and it's going in a fiat. We also on our platform have a possibility to, or our clients on our platform have a possibility to invest also in a crypto. We are using the confirmer services for it because they are taking the crypto and we are receiving the euros as well. It means that we are not touching too much the cryptocurrency because we doesn't want to have another exposure. On a money fund, basically the money it's going from our investors to the regulated account, which is under the payout company on a Slovakia. And then as soon as we collect all the money, we are withdrawing and directly to pay the seller of the property.
Thank you, Daniel. And how do you manage ownership of properties in different locations? You mentioned it covers locations in 5 or 6 or even more countries. Do you have separate companies that own properties for each company, or there is one main company? What's the structure?
Yeah, we did it. We did it under one company, under the InvestBay. Yeah, except one exception, which was the Slovakia Republic. It was for tax purposes. Currently, because we are changing our operation model from MiCA regulation to MiFID regulation, we are preparing the SPVs for each of a property, and this property will be owning the each by each SPV. Yeah. And sometimes we also have to build some operation company, like for example in the Bali. We have to, from a tax perspective, it's better to create also the company in the Bali because there is a reduction of a tax. Yeah, when we are operating in Europe, it's much easier because we can operate from a Czech Republic, let's say.
Thank you, Daniel. And the other questions, the opposite one, how do you manage cash flows from properties to investment companies and back to investors, particularly when those properties are in different jurisdictions and involve different currencies?
Yeah. Definitely. This is a wise the backwards basically how we are earning the money for our customers. I have to firstly say that we are always taking when we are choosing the property, we already choosing the property where is already some global operator like a Windham, Accor, or Idyllic, or somebody else, and we try to cooperate with these big brands. We have a contract with them, which says that they are operating the property for us, and they also share the profit with us. They are keeping some percentage of earnings for themselves, for their services, and also for OTAs, which is a online travel agent like Airbnb, Booking.com, and the rest they are sending us to our account. We are then distributing pro rata with our investors, and the flow is that it's going firstly it's going to our internal wallet, which we have it for each investors on our platform, and the investors can choose if they can reinvest this money to the new projects, which people usually or our investors usually does, or they can ask for withdraw the money. Then we are sending the money in a fiat currency and in a currency which they choose on our platform to their bank account. This is how it flows.
Mm-hmm. Thank you. Thank you very much, Daniel.
Yeah, welcome.
We welcome the questions from the audience. Please raise your hand to ask or put it in the chat. Oh, there is actually a question to Daniel. Let me read it out loud. What is the profile of your typical investor, and how do you think it is different from investor in a classical real estate fund?
Mhm. We have a different type of investor. I would say we have some from new generation who like our project, how we are doing the co-owning possibility to own piece of a property, and we also have older people who doesn't have a possibility to invest in the real estate because they can't invest entire amount, and we bring them the possibility. And specifically in the Czech Republic, here is a need to own some we say brick, the piece of a property, and this possibility really brings our platform really brings the possibility to invest even to older people in a real estate in a way which they couldn't do before. And some small part, it's also crypto investors who like the technology and try to new technology, new platforms, and so on. Most of our investors our experience, and they are usually diversified portfolio through the various channels and through the various asset classes. And also we are one of the alternative how to invest in a property way, because as we say, with us you do more co-owning of the property. It means that it's a new way how to co-own the property.
Thank you, Daniel. As a follow-up to that, one of the key questions for many, especially old school investors, is the concern that the money are put into something that may look like just another electronic record, and people are concerned about the security for the investments. How do you address that? Do you see the problem in perception of your investors in that?
No. Thanks for changing the regulation. We also changed our operation model because one of the key which we were fighting was regulatory uncertainty, as already Philip mentioned. Yeah, there wasn't sure under which regulation we should be working for. And we were preparing all the time for MiCA regulation. Suddenly we find that the MiCA regulation, it will be not usable for, we thought that we were creating asset reference token. It was obvious first thinking, but then we have to go under the MiFID. And in this case, as I mentioned, we are changing the operation model, which is going to use also the Central Security Depository DLT regime, which was launched in the Czech Republic as a first DLT regime on this scale. And we will be using it. It means that in our operation model for each property, we are creating the stock company. The stocks are going to the Central Security Depository. The company owns the property, and connected to stocks which will be stored in a Central Security Depository. We will be creating the token which will be helping to trade with the tokens. But if you move the tokens, we will also move the tokens in Central Security Depository record, which we are connecting in these days. It means that our client, our investors will be hold tokens as well as the security. I mean the stocks which will be written in the Central Security Depository DLT in a pilot regime.
Thank you, Daniel. And I'd like to follow up on the similar questions with Philippe. How do you, from the legal standpoint, how do you design the structure that a cautious buyer can be sure that the token is legally tied to the underlying bond, share, property, and the rights are recognized by courts and regulations, not only on the platform of IT system.
Yes, yes. Thank you. And it actually is one of the key questions we have been discussing with InvestBay for a long time. And obviously, I would maybe illustrate it on this example. First, the question would be in relation to structure is what technology would you like to use to issue the digital asset? Because at least in the Czech Republic, and there's a very specific environment and regulatory uncertainty, meaning that any digital asset which is issued on a public blockchain, on public DLT, is automatically disqualified from being qualified as a security. On the other hand, the ESMA guidance would say, oh, if this looks like a security, it should be regulated as a security. So the question is, so first, which technology? If you're not sure, second question would be, would you like to scale internationally? Because if yes, then you would need to have a structure, a model which behaves the same from the legal perspective in every jurisdiction you would like to enter. So on that basis, with InvestBay ultimately decided that it would be much more beneficial for them to structure their tokens as financial instruments, as securities, not as crypto assets under MiCA, which could be done under Czech laws by registering them with the DLT, which is operated by the Central Securities Depository, which is something very unique, I think, across the EU, because obviously blockchain or DLT by definition should not be operated by a single entity. But in this case, it's regulated by the Central Securities Depository with a license under the DLT pilot regime. And this under Czech laws does qualify, even from a formal perspective, as a security, and would be very much likely be qualified as a security from the material perspective, also in other jurisdictions such as Germany, Austria, etc., etc. So I think this, from the structuring perspective, is we want to address what technology do you want to use, and what markets do you want to penetrate. Is I think maybe the basic key questions we would need to consider also from a legal perspective.
So yeah, actually following up on that, what are the key legal questions you should ask if a client comes to you and say, we want to tokenize X assets? So in order to decide whether it is a crypto assets under MiCA, a security under MiFID, a fund or collective investment scheme or something else, what questions do you ask to get to the bottom of it? It would be good if you could illustrate this by examples.
Got it. I think that the basic questions, a part of them, those points we already covered, would be, we want to address, do you want to collect funds from the public, from retail, or just from qualified professional investors? Do you want to reach out to them publicly, or will it be a private placement only? I think that's one of the first questions. One which is particularly, I think, important in relation to the collective investment schemes is what would be the return of the investors? Would it be a fixed income instrument? Would it be subject to market conditions, which I think would be much more natural to these types of assets? But in that case, you need to also be very careful of how you structure the management part of the project, because this is something we lawyers call joint investing, or third-party management is something which is reserved for regulated collective investment schemes. So this is also something we need to look at with when structuring this, because obviously you don't want to end up with an unlicensed collective investment fund.
Thank you, Philippe. We have questions in the comment section. Let me read it out loud. I have a regulatory question. If the platform or operator become insolvent, is the in the typical structures you see now, do token holders have a strong direct claim to underlying assets or end up as an unsecured creditor of the platform? Can you point out one or two structure you consider relatively robust in insolvency situation?
Okay, thank you for the
Quite a lot of
questions.
questions.
It's actually very practical and to the point. What we see in practice is the SPV model, which is when the SPV owns the asset. It's usually a single asset it owns, and issues the tokens, which from legal perspective are receivables claims against the company for the performance of the underlying asset. So in case there is an insolvency scenario, the token holders would be creditors of the SPV, and would, in an ideal situation, would be satisfied from the sale of the underlying asset, which is in the insolvency estate of the SPV, the issue. This would be an ideal scenario. Obviously, from legal perspective, this would be qualified as unsecured creditors. I think you may also think of structures where there is security as a layer in addition to the underlying token layer, maybe mortgage pledge over the asset in favor of the token holders. They may be represented by a security agent, something you may introduce also this in the structure. So perhaps when structuring a new project, we would be thinking, I think, this way to provide the investors, the token holders, with sufficient comfort that they will be covered in an insolvency scenario. Another way would be to structure the tokens, as Daniel already mentioned, the asset reference tokens under the MiCA regulation, which, apart from it being very regulatory heavy and complicated to complete, there is a specific regulation in MiCA saying that in an insolvency scenario, the token holders of an ART are specifically entitled to be satisfied from the sale of the asset as a preferred class of creditors. But like I said, we currently have no ART's license in the EU after almost 2 years after MiCA has gone into effect. I think it speaks for itself. But this would be our thinking, I would say.
Thank you very much.
Maybe I will add one more thing for security of our clients. We also do if we want to put the deed on the property, we will have to ask our investors or sell the property. It means that it's under their voting system, and they have a possibility to vote either to put a deed on the property or not. Yeah, it means that the property should basically from the start till the end stay without any debt on it.
Yes. If I just made it, thank you, Daniel. It's a very good comment. It's one of the ways how can you, let's say, minimize the risk of a structure being qualified as an investment fund, is to say bring the investors on board in relation to every major decision you make about the project. InvestBay does have this incorporated by voting, which I think it's a very good way to do it. But that's also one of the important say features you need to consider when starting a project like this.
Thank you, Philippe and Daniel. Question to Daniel, more general one. What has been the biggest operational or legal challenge so far for you? For example, a tax rule, banking restrictions, property law, structuring, and how do you resolve it in reality?
Yes, as I already mentioned, the most struggle we have with regulatory uncertainty, which was really long. We were waiting for MiCA regulation will be coming in force. Then we prepare all the information. Our national banks waiting till they will be nominee as the one where it should be responsible for it, and the change of the. When we finally found that we won't be under the asset reference token, the change to the MiFID regulation was really, the uncertainty was the most crucial things for us, because you didn't know. We want to be always somehow regulated, and we always try to weigh how to do it. And I want to once more thank you, Philip and team, that they are helping us all the way finally to the stage where we are. But finally it ends in a very, very good way for us as well, because under the MiFID regulation we can use the same distribution channels as because usually the financial advisors, they have this regulation, they can distribute this type of securities, even it's tokenized. If we will stay under the MiCA, the distribution channel will have to also apply for MiCA regulation, and I'm not sure that it's the right time for doing another regulation, and not everybody wants to do it. This is something bad. It's good for something else, situation.
Okay. Right. Thank you. Thank you very much, Philippe. Thank you, Daniel. Let me close with a few simple points. Today we learned that tokenization doesn't change the basic economics, and you are still talking about the bonds, fund interest, real estate, equity, and the technology changes the way that we issue, record, and transfer that, but not the underlying assets. Secondly, the regulation is key. It comes first and not the last. Before issuing tokens, writing the code, you should have the clear answer: is it a security? Is it a fund product? Does MiCA apply? Where? And without that, there's no product. It's just a potential breach of regulation. Third, the key question is what do investor owns if they buy a token? There should be a clear legal link between the token and underlying assets and right. And that has to work not only on the platform, but in the contract, company law, and ideally to be supported in court. And the legal structure must allow downstream of investment from the client to the property and back from property to the issuer and to the client. So if you're thinking about doing something in that space, the order is just define the assets and the cash flows, define exactly what the asset, what the investor owns, put it into the right regulatory framework or bucket, so to say, and then worry about the token and the chain. Now, thank you for your time and staying with us through the session. We hope it was useful, not only on a high-level overview, but as a reality check for maybe some of the project. If there are any points you'd like to dig more into a specific structure or jurisdiction or use case, feel free to reach out to any of us. We're happy to continue the discussion. Thank you again and enjoy the rest of the day.
Thank you. Thank you also from me, and goodbye.
Thank you. Bye.
Thank you very much.